Hey everyone, my name is Daniel and welcome back to another video. I hope all you're having a great day out there. As always, despite the red that we've seen in a lot of stocks out there, here today, we need to talk about a very key indicator to watch in the markets that could potentially dictate whether or not we see another leg lower in a lot of stocks that have already seen massive downtrends over the past couple of weeks, months, and really since the beginning of 2021. As we know, I made a video yesterday talking about this rotation that we've seen over the past few months since the beginning of 2021, that despite this massive move in a lot of the indexes, again, the S&P 500, the Dow, the Nasdaq, a lot of individual stocks have fallen significantly, mainly in the small cap space. And if you're an individual stock picker out there, unless you're buying the big guys, the Apples, the Googles, the Amazons, you've actually experienced a significant downtrend despite this massive move upward in a lot of the stocks that we like to invest in, especially the ones that we invest in here on the channel. So in this video, I want to take you all through exactly what's going on in the markets, what this key indicator is, and exactly what I'm doing in response to this. So if you end up enjoying this video, feel free to hit that subscribe button, and let's get into it here. So again, these are the stocks that I'm talking about. When we talk about stocks that are down significantly, the Tattooed Chef, a $1.3 billion company, year to date, down massively. Smile Direct Club, year to date, down massively from around $12, $15 per share all the way down to $4.70. You look at Acuity Ads, another small cap growth play, down significantly from the all-time highs it made in the beginning of the year. And even within this downtrend, you have Chinese stocks suffering significantly, like Alibaba, down 7% here today, on top of the massive downtrend you've seen. And again, although this may not be as bad as it is with some other stocks, Alibaba's a massive company, right? So the fact that what used to be potentially a $1 trillion company has fallen well over in half, that's big news. And now, when we look at what's happening in the broader markets, again, the larger indexes continue to roar higher. S&P 500 now at 4,400 points. NASDAQ 14,500. Look at the Dow Jones just short of 35,000. But there's one indicator amongst them all that has not actually experienced a significant uptrend over the past half year, I want to say, and that is the Russell 2000. And when we look at the Russell 2000 here, we can see that it's actually been very flat year to date, seeing that, again, from roughly late February, it's experienced a significant kind of stagnation, right? And when we look at the Russell 2000, obviously this is composed of some smaller cap companies, again, like I mentioned previously, companies that are generally ranging in the market cap range of anywhere from just a couple $1 billion to potentially tens of billions of dollars. But again, not the $100 billion companies, not the $1 trillion companies, generally in the billions to potentially hundreds of millions of dollars when it comes to the market capitalizations of the companies within the Russell 2000. And again, I mention this because the Russell, it's the only indice that has been completely flat since February. And within that, you see this massive downtrend in a lot of the companies that exist within the Russell 2000. So when we look at what's happening right now in a lot of these stocks, the Russell 2000, the move that it will make over the coming weeks will dictate exactly what happens here with the stocks that we like to invest in, and here is why. When we look at IWM, again, you can search this up on Yahoo Finance, any stock trading platform that you have, IWM. This is the Russell 2000 ETF. And we can see that since February, it has made a very clear support level at right around $211. Now, when we look at where this thing is at this moment in time, it just closed, or rather, again, after market, it's trading at around $212. If we break and sustain levels below $211, exactly where we bounced off at just this morning, when we look at IWM here just on Google, take a look at this. Watch, this bounced right here off of 211, that clear support level, bounced off of this. If we see a rebound, that is good for small cap companies. But if we end up breaking below the $211 level or 2,100 level on the Russell 2000, you can expect a significantly larger leg lower with a lot of these smaller cap companies. Now, where will we go after that? Again, that remains to be seen. This kind of stagnation was, rather followed a significant uptrend that happened in the back half of 2020. So you look at potential support levels, there aren't really that many until potentially, that, I don't want to say 170 level, but either way, We'll see what ends up happening in the situation. This is just a video that I wanted to make, showcase exactly what's going on, a very key level that's very easy to watch. I recommend you potentially, go onto Yahoo Finance, add this to your watch list, watch it. What's going to happen? Because if it drops lower, that potentially could dictate some move to the downside when it comes to all of these stocks, which have already experienced significant downtrends, which is obviously what we, if you're a buyer, that's what you want to see. But if you are heavily exposed to the markets, you want to see a bounce off of that level. So that's kind of my 2 cents on the market at this point. You got to be prepared for both situations, whether or not we see, again, a rebound back to that 230, 240 level, or potentially another leg lower. Those are the 2 scenarios. We got to break lower for that to happen. That's my kind of opinion on all of this. The first time I'm really covering some form of technical analysis here on this YouTube channel. Again, I'm not a technical analyst. I'm not a professional when it comes to technical analysis, but this is something that a lot of people are talking about. And it is a very, very key level that even if you're not into technicals, you can totally see the resistance that has formed around this level over the past 6 months and see the significance of what might happen if we break below that. Now, keep in mind, if it's just a quick blip underneath that, which again, we saw that many times throughout the past 6 months here. Again, back in March, we saw it dip to again around that 208 level. Back here, it bounced off pretty well. You saw again, middle of July, bouncing off of 208. If we see a sustained drop below 211, that's where it gets problematic. If we see more of a quick V underneath that, it's better. But obviously, this is, what's happening. Just my opinions, not financial advice. Let me know what you think in the comment section down below. And let me know what your stocks are on your, sorry, I can't even, pronounce anything correctly, but sorry. Let me know what stocks you're watching, what stocks are in your watch list. And if you have any companies you want me to analyze, let me know in the comment section down below. Thank you all so much for watching. Now, I'll see you all in the next one. Bye-bye.